Hi guys, good afternoon and welcome to Midcap Radar. I'm Pavitra Parekh and let's quickly take a look at what's going on with the market action right now because we are at the low point of the day. We're seeing a 160-point cut on the Nifty. So we're at the low point, almost 1% lower. In fact, we've broken below the Feb 28th low also that we were talking about. So that is something important that we are tracking. That level was at 17,255. So briefly broke below that. It's back below that level right now. 165 points gone there. A lot of the pressure today coming through from the broader markets. So take a look at the mid-cap index, the small-cap index, because that has been the place where you've seen the maximum pressure all through the morning, right? So it's 1.3% lower on the mid-cap index right now, almost 400 points gone. And this is really reflecting in the advanced decline ratio as well, which is currently around 540 stocks in the green for over 2,300 which are in the red right now. So that is showing you the kind of skewed advanced decline ratio 1:4 over there. Also take a look at the Nifty Bank because that's where you're seeing a lot of pressure come through over the past hour or so. So over 600 points gone on the Nifty Bank. Of course, IndusInd is in focus and the top loser on the Nifty also today because of news flow that came through. But a lot of the other larger names, the likes of SBI, Axis Bank, all slipping to the low point of the day. So I'll watch out for that pack as well. And then in terms of sectoral losers and sectoral indices, you really have the Nifty Auto pack, which is seeing the biggest cut come through today. So take a look at the Nifty Auto Index. It's down 1.6%. And a lot of the auto ancillary companies also coming under severe pressure on the back of news flow. But let's now talk about a few of these individual names. IndusInd Bank, like I told you, is in focus after the RBI has approved the extension of MD and CEO Sumant Katpalia's term by 2 years, even as the bank had actually asked for a 3-year extension. The stock is under pressure, like I mentioned, but Abhishek is here with all of the details. Abhishek?
Pavitra, as you mentioned, RBI has granted a 2-year extension to the term of Mr. Sumant Katpalia beginning from 23rd March 2023. So, board had actually sought for a 3-year period. So, this is on the lower side what the board had sought from. So, brokerages say that the move from RBI has come in as a negative surprise. However, the valuation of the stock at around price to book value of 1.2, 1.4 times is on the cheaper side on a 1-year forward basis. So one can use this correction to add IndusInd Bank in their portfolio as there is no risk to fundamentals of the bank. However, brokerages like JP Morgan have downgraded the stock to neutral from overweight. They have cut massively on the target price to about 1,060 per share from 1,400 that they had earlier. Even Jefferies had cut the target price to about 1,550 versus 1,600 that they had earlier. Macquarie, Citi, Morgan Stanley and Moti, they remain, positive on the stock with the target price ranging from 1,400 to as high as 1,525. One look at the other current MDs or CEOs term which are ending in 2023 for various lenders is that City Union Bank, AU Small Finance Bank and Karnataka Bank, their top management, that is the MD or CEO position, that term is ending in April 2023. ICICI Bank, SBI and HDFC Bank, over there the term will end in October 2023. Kotak Bank, that term for Uday Kotak will end in December of 2023. Back to you.
All right, Abhishek, thanks a lot for bringing us all of the details there and also taking us through what the calendar looks like as well on that front. But, we've taken you through what's going on with the biggest Nifty loser. So let's talk about the top gainer today as well. That is Tech Mahindra. It's up over 7% in trade after it appoints former Infosys President Mohit Joshi as a successor to CP Gurnani as MD and CEO of the company. So Rima is here with more details. Rima, this was a big sort of factor that everyone was watching for this stock.
Absolutely. The big trigger has finally played out. Months of uncertainty and speculation has now come to an end. Tech Mahindra has announced the appointment of Mr. Mohit Joshi from Infosys as the new MD and CEO. He's the current MD CEO designate because he takes charge only in December of 2023 after the current CEO, MD CP Gurnani's term comes to an end on 19th of December. After that, Mohit Joshi takes charge. But in the interim, he's likely to join in June, so he will have sufficient transition period. And he's been appointed for about 5 years. So the stock is higher because A, the uncertainty comes to an end. Speculation has been, put to rest. 2, he's got strong pedigree. He was earlier the president of Infosys of banking, financial vertical and healthcare, 2 very large verticals, and he also had executive responsibility for large enterprise deals. Now, this appointment by Tech Mahindra also marks a change in the company's strategy. So historically, Tech Mahindra was associated with a greater focus on telecom, but Mohit Joshi does not have a telecom background. He's got a non-telecom background, BFSI, healthcare, etc. So it does indicate that Tech Mahindra is now focused on growing its enterprise book. It's non-telecom group. Also, he's got a task cut out ahead of him. It's not going to be easy. Tech Mahindra is a large company, and it's been trailing peers in terms of growth rates and in terms of margins. So he will have to reverse Tech Mahindra's underperformance. And generally, whenever there is any leadership change, you do have attrition at the junior to, senior to mid-level. So that's something Tech Mahindra may have to contend with. But Tech Mahindra's gain is Infosys' loss. So that's the reason why Infosys is sulking in trade. And it's not just Mohit Joshi. In the last couple of months, they also lost Ravi Kumar to Cognizant. So 2 presidents have stepped down from Infosys. It's going to be a big hole that they will have to fill. And that's the reason why Infosys has been under pressure today. Back to you.
All right, Reema, thanks a lot for taking us through all of the details on this management change at Tech Mahindra. But with that, we do need to get into a short break now. When we come back, there's lots more stocks which are in focus. So we'll bring you the updates on the other side.
A very good afternoon. You're watching Midcap Radar on CNBC-TV18. I'm Ekta Batra. With me is Reema Tendulkar. And it's turning out to be a session where we are definitely seeing some amount of ripples of uncertainty into the Indian equities as well. So we do have the markets which are under pressure. 17,211 is currently where the Nifty is at. And we're down over 450 odd points for the Midcap index. So there is pressure across the board, which is really being led by the financials at this point in time. So maybe the Bank Nifty and the constituents of the Bank Nifty should come up for you, because it's close to around a 2% cut that we're seeing for the Bank Nifty. Almost 800 odd points knocked off currently for the Bank Nifty. A lot of this started at 12:30 p.m., which is basically once the news with regards to HSBC taking over the SVB unit of UK, which came up, and that seems to have probably rattled the markets a little bit. And you can see that sort of downtrend which has taken place post 12:30 p.m. That's the entire picture of the Nifty 50. As you can see, a lot of the financials are currently under pressure. Hi, Reema.
Hi, Ekta. But this decline is so surprising, right? The Dow futures is still up 300 points. And I was taking a check of the European indices right now, the futures, because they've not opened up yet. But the CAC DAX and the FTSE are currently not showing you any kind of a steep sell-off, something that we are seeing out here in India. So this 1% fall on the Nifty, and from the day's high, it's been a 300-point knock on the Nifty, because the day's high today was 17,530. So it's exactly a 300-point downfall that we are seeing on the Nifty from the day's high, has come in despite not a commensurate fall across the rest of the global market. But let's get you an update on the Adani Group now. They have prepaid $2.15 billion worth of share-backed financing ahead of a deadline. A $500 million loan taken for the acquisition of Ambuja Cements was also paid back ahead of time. Vivek is here with the details. Vivek.
Well, that's right. So there has been quite a bit of talk and concern regarding, the promoter pledge, the share-back financing, and, the prepayment as well as repayment of maturing bonds, as well as some of the loan against shares that was taken by the Adani Group. So yesterday's press release that the management, the company sent to us clearly indicates that at least as far as the certain term loans as well as certain prepayments are concerned have been made. So what the group statement indicates is that there has been a full prepayment as far as share-backed promoter financing is concerned. They've completed, gone ahead and increased stake in Ambuja financing by prepaying almost $500 million of the promoter debt, and this is to reduce the sponsor level leverage. Also, what they've done is that $2.15 billion of complete and full prepayment of margin-linked share-back financing is something that they have done. So when it comes to the Ambuja as well as the ACC acquisition, what they are saying is that the promoters have infused almost $2.6 billion out of the total acquisition value of $6.6 billion. And what the company also indicates is that the entire prepayment program of $2.65 billion has been completed within 6 weeks. So clearly some positive news as far as, prepayment of loans is concerned. On March 8th, remember, the Adani Group had also prepaid close to 7,374 crore worth of share-back financing.
Okay, thank you very much for that, Vivek. Let's also move on and get you a pharmaceutical stock update. Sources say US FDA is auditing Torrent Pharma oncology block at Indrad. Ekta, how big is the Indrad facility and what does this mean?
Well, it's definitely important news for Torrent Pharma because their oncology block, which is basically a new facility that they have, is now getting inspected by the US drug regulator. So this would be the first inspection by the US drug regulator of this oncology block, which is located at Indrad. Now, according to my sources, the US FDA inspection did begin today. It is expected to be a PAI inspection, which is basically a pre-approval inspection. It is generally means that it is product specific. For example, if, the US FDA wants to give approval for a product which is filed from that particular facility, they will go down to check to see whether or not that facility is feasible for producing that product and importing it into the US. Now, that is the kind of inspection which has taken place. It is the first audit of the by the US FDA of the oncology block, hence it holds importance. But on that note, we need to take a short break. More news and updates on the other side. Stay tuned.